audience. Good day. Dear organizers, thank you for having me here. And my privilege to serve you appetizer before the lunch and talk about this beautiful transaction. This is about me. When I look at this 20+ number next to my name, it's a bit depressing, but in our industry, it's like with good old wine. You know, you get better when you mature, so I hope I'm getting better. INVL, INVL, in few broad strokes, what we are. So we are a company established in 1991, post-privatization, publicly listed since 1995. Today, we present ourselves as a leading Baltic asset manager. We manage alternative assets. Around half of 1.5 billion belongs to traditional, to alternative asset group. And private equity is our biggest pride and glory. We also still manage a classical side, which is namely pension funds and discretionary portfolios for our customers. And we also service our customers in family offices in Lithuania, Latvia, and Estonia. What is a bit unique for a Baltic asset manager and a bit special about us, that we at the same time act as an investment holding, and we deploy more than 2 billion euro balance sheet in different investments. Big portion of that is our GP, general partner investments, or so-called skin in the game. The latest number is above 60 million, where we invest alongside our investors into various alternatives that we manage. We also own just shy of 20% in Žurauskas, the number 4 bank in Lithuania, and close to 8% in largest bank of Moldova, and we have a legacy investment in leading agricultural player in Lithuania, which is Litagra. Now, let's move into the transaction, into the deal. So whatever you do in your life, it kind of makes sense to understand what you are doing and to set the objectives. So for us, it was, you know, all about borrowing 10 million euros in capital markets. At the same time, you know, we are very debt-light balance sheet, so we felt that it would be very natural and nice to add bond layer into a capital structure, because we are only almost pure equity and very little bank financing. When it comes to favorable terms, so for us, I mean, and it's also natural to compare to banking alternative, we could extend the duration. We could borrow 3-year tenor, and we also wanted more flexibility, including refinancing options, which we achieved. Broad investor base with 10 million transaction size. We were maybe a bit humble when it comes to institutional investors. We were focusing on attracting retail investors from all 3 Baltic states, Lithuania, Latvia, and Estonia. And we said, okay, if we are lucky and if we are noticed, we would be very, very happy and proud if we get some institutional accounts on board. And fast execution. We kicked off the project early April with ambition to print before midsummer, which was fairly intense timeline. Now, like in any good restaurant, you know, you need to serve a good dish, but also in a good way. So it's all about preparing the transaction, the right format, the execution strategy. So for us, and I'm coming from investment banking background, so I mean, the golden rule is that you ask a question, would I buy it myself? And yes, no, or maybe. So if the answer is yes, you probably are able to sell it. If the answer is no, I'm not even sure if it is prudent to sell what you don't want to buy. And if the answer is maybe, you need to figure out how to structure it so that it becomes a yes. So for us, 3-year tenor, it was a debut deal for us, so we allowed the market to find the price. We offered 7%, 7.5%, and 8% choice to investors. And we said that we make transaction really attractive if we offer collateral. So we pledged Žurauskas shares in in a ratio 2:1. So essentially, every euro we borrow, we pledge €2 value of Žurauskas shares, and we commit to semi-annual maintenance test. So we recalculate the pledge. And obviously, the early redemption options, which I mentioned, were very important for us in terms of flexibility. NASDAQ, without NASDAQ, nothing happens, and probably we would all not exist here without NASDAQ, so it's obviously listed on a stock exchange. Now, transaction well served. It was also very well received. 2.9 is a beautiful number, so we had 2.9 times more demand in relation to offer. Why it's such a beautiful number? I think if you are 1x, you barely made a deal. It means you are probably oversized or overpriced. So something is not working well. If it's 10x, it means you are either too cheap or too small. So I think this 3x, 2.9x is a perfect number for the execution. And also we achieved 7%, which was the best possible outcome for us on a day and in the market conditions. So it was at the end allocated to 216 investors, and we received almost 500 bids. Now the action. So we launched the deal on 3rd of June. We had 1 full week, and we had 3 extra days for book building. And at the first glance, it might feel that it was a bit tense and stressful. But actually, the turning point happened on the 6th of June, where we had the investor webinar. We presented our credit story to investor community on the webinar, and I was maybe a bit naive. I was expecting 2-3 questions afterwards, but this Q&A session kept 30-45 minutes into the Q&A. We kept receiving questions, and the questions kept coming, and the quality of those questions was very, very strong. So I kind of started to realize, okay, the investor community, retail community is becoming more and more educated, and we understand the product better. But something is happening here, and somebody is grilling us. And basically, next day, we engaged with one large pension fund, and it was indicating interest for the full amount. So it was always in the background, so we slept pretty well at night, even though you can see we basically met the volume target only on the last day before closing. And then basically last day, we solved the price. We managed to agree at 7%, and we printed the deal, 10 million at 7%. So beautiful deal. Key takeaways. Number 1, serve the right dish. Number 2, if you want to move fast, you need to plan twice, 3 times, so scrutinize planning. And number 3, it's all about the team. So you need to have the right people dedicated to a project, committed to a project. We had 4 or 5 people from the company focusing on a project, and we delivered. And obviously the right partners, the right mix of qualities is something that you need. But frankly, if you are a debut issuer, I wouldn't advise to push for 2-month timeline. I would say that 3-4 months would be much more natural and easy. Yeah. So that's our story. Thank you, and I'm open for questions.